Okay. So in you structuring deals, I mean, you speak about structuring deals on a daily basis for SMMEs in particular, right? What would you say, or rather, how are you guys considering the issue of tax? Because the truth of the matter is that when deals are structured, there's always tax side of things. How are you guys supporting the SMMEs during that deal structuring?
So with deal structuring and tax, I think it all goes hand in hand. I think sometimes what we see with the entrepreneurs, especially with the smaller businesses, is that there is a lack of compliance when it comes to tax, and that affects their ability to borrow money from institutions like ourselves. For example, part of our due diligence, we look at financials. What we then do is we compare the financials to your ITA 34, which is your submission to SARS. And any deviation there already cast doubt on your integrity as an entrepreneur, the integrity of your financials, and that hampers our ability to lend to you. We've also seen issues, for example, with our property deals, where we structure property finance at 100% over a 10-year period of 120 months. And at the same time, with the transfer of property, there may be VAT that needs to be paid. So what we do is, to assist the entrepreneur, we structure the VAT portion over a 12-month period. But what we've noticed is that the clients usually take longer than 12 months. And I think maybe that's where you come in as a tax specialist.
Look, I mean, obviously it's not a secret that I deal with some of the clients that will then go and borrow money from business partners. And I mean, speaking of structuring deals, VAT consequences during the acquisitions of the properties or infrastructure that you guys will typically finance, what I've seen and in my experience is that there's poor cash flow planning. And maybe let me give you a practical scenario.